Hey everyone, this is Kirk here again at optionalpha.com, where we show you how to make smarter trades. And in tonight's video, we're going to go over the opening and closing trade that we had for Tuesday, March 3rd. So only one trade in each category today, no adjustment trades. It's actually been a pretty quiet beginning to this week and I guess end of last week. I haven't traded that much because actually a lot of the things that we have in our portfolio have been working really well. And so we're making, $100, $200 here or there every single day. So at this point, we're not trying to make too many adjustments because what we have on is actually working. But still being the case, we still need to close out trades that are really profitable and start to add new trades for March, April, and May. So let's actually start here tonight with Apple. So we're actually playing Apple just a little bit bearish and trading a long put calendar spread in Apple. And we're actually going to do this over the course of May and April. Again, so as always, you want to buy that back contract, which is May, and we're selling that front contract, which is April, focusing all of our attention on the same 120 strike in each of the contract months. Now, we paid a little bit more for this type of spread because Apple's a little bit pricier of a stock, and so we definitely paid higher than we usually like to pay for calendars. We don't usually like to pay too much for them, but we ended up paying about $1.60 or $160 for this calendar spread in Apple. Now, the reason that we decided to go with the calendar in Apple is two reasons. One, implied volatility is really low right now, so that limits our basically strategy selection down to calendar spreads, debit spreads, ratio spreads, things of that nature. We decided to go with the calendar spread because, again, implied volatility is low, and we think it could head higher as we get through March and into April, because again, this is actually all the way out through April and May. So we've got a lot of time here to see implied volatility rise, which would really help this calendar spread. Now, we also decided to go towards the bearish side because we think that we might get a nice cross here on MACD, which has been pretty reliable going back in the last year or so. On Apple, you can see the last time it had a bearish cross where this green moving average crossed below the purple one, we actually did see Apple start to have a slight decline over the next 1 to 2 months. So given the recent run-up that the stock's had, I think it's pretty reasonable to think that it could possibly make a move down below 125 into the 120 territory, which is where we've kind of positioned ourselves. So we definitely are a little bit aggressive in our pricing and our strategy here. We definitely want to see Apple move lower. And did so with how we position the strategy. So here's the profit and loss diagram. You can see it kind of peaks here around 120. This is where Apple is currently trading right now. So we do need Apple to move down about $3 before it gets into our kind of profit window. But if we start to see implied volatility expand, what you'll notice is actually that this calendar will kind of swell like this. So even though right now it's set up that our break-even point's about 126.5 or so, if we see a nice improvement in volatility and it expands, you'll start to see this calendar start to really swell in size, and that's really where you get the benefit of trading these calendars from markets that are low implied volatility to markets that are high implied volatility. So that's what we're looking for here in Apple. Again, as far as the strikes that we selected, we just wanted to be fairly aggressive going out of the money. We did the 120 short puts in April, and we did the 120 long puts in May. Again, same strike price, but selling different contract months. The one closing trade we did have today is the closing trade in XOP. That was a pretty profitable trade. Very small trade, only 2 contracts, but we sold the 56-57 call spread above the market. As XOP has headed lower, as we've gotten closer to expiration, these are now worth about $8. We've made more than 50% of what we could make on this particular trade, so it's only best just to close it out. It's not worth another $16 just to let it hang on for the rest of the month. Again, with XOP, we sold it when it had really high implied volatility. We've now seen implied volatility drop in the stock, so we sold it, I think, back when it was above 60 or 70, and now you can see it's now trading in the 45th percentile. So that's been really good, and we've had a very slight decline in the stock that's also helped out as well. So 2 things really worked in our favor for this trade, and again, at this point, you just have to be diligent, just closing out some of these trades and being consistent about it to bank a lot of these profits. So as always, I hope you guys enjoy these videos. If you have any comments or questions, please add them below. If you're watching this video somewhere else out there online or on YouTube, you just have to understand that these alerts and this video go out to our members the same day. So you're actually getting them about 15 to 20 days after they're sent out to our members. If you want to get these types of trading alerts and this video that goes with it every single night, you've got to sign up for a membership at optionalpha.com. Until next time, happy trading.